name is Philip Leaf. I'm Principal Consultant at Millennium Consulting. Today, we're going to be talking about the Code of Financial Modules, Procurement and Invoice Matching, normally known as POP and PIM. Now, POP and PIM are both separate modules within the financials. They are accessed as normal through the portal. As you can see here on this demonstration, we've set up a portal for purchase ordering and invoice matching in conjunction with financials and billing. What we're going to do today is go through a P2P process. So the first thing we're going to do is create an order. Like financials, procurement works with input templates and documents. So when you're setting up the procurement module, you have to set up a number of documents for the different types of purchase orders, whether it's for a capital PO, for example, or an OPEX PO. And you have to set up input templates. So what you can see here is an example of how you could set up the purchase order. Now, it's very simple the way that we've set this one up. You can have lots of extra fields, creating things using user-defined fields. So we could, for example, have a field for the originator, i.e. buyer, the approver, lots of different fields pertaining to your particular configuration. But as I say, we've kept this simple just for this demonstration. Now, initially, some of the things will be defaulted. Obviously, this is a UK company, so the currency has defaulted to GBP. But we obviously can change that. It's fully multi-currency. We can change it to whatever currency we want. And when it posts to financials, it will obviously convert to the home and, if necessary, the dual currencies as well. I'm going to keep it simple, keep it in GBP, and the purchase date will default to today's date. Again, you can override this to whatever date you want. Now, this area here is what we call the header information. This all pertains to the purchase order as a whole. Down here, we've got the details, and we can add as many lines as we want on the PO. So as far as the header information is concerned, we need to add the supplier code. Now, a buyer may not know what the supplier code is. So he could, for example, type in the name and Coda will come up with the appropriate code. Same with the department. I can start writing in the name of a department and it will come up with the appropriate code. Now, you'll notice that now that I've added the supplier code, the supplier address is there and also the default delivery address. And dependent on security, the buyer can change it. If I go in there, I can change the supplier address to whatever I want. But again, it's based on security. Once you've finished the header, then you have to add the items. Again, you don't need to know the code. Typing in item and it will fill in. Now you can see that it refreshed then, and what it was doing was checking what type of code an item is. Is it a quantity based or is it service based? So you can see that the quantity has now changed. You cannot add quantities to this. Audit fee is just a service. So we can put in a price and any additional information that you want in there. And this additional information, that is the information, for example, that could be put onto the physical PO when you send it to the supplier. Now, the validate button, what that's doing is it's checking financials to make sure that the account code is correct. You see, the buyer doesn't need to know what the GL code is, what the department code is, because what's happening in the background is Coda is automatically filling in the account code from the information that the buyer puts in. The validation is making sure that those, for example, left-right lists are okay and the buyer is able to create this PO. Once the validation is done, what we can do then is submit for approval. Now, as far as this demonstration is concerned, I've set it up for auto approval. But what would normally happen is that the PO would go through your company's approval matrix. So if this is for audit fees, it may go to the financial controller. And if the financial controller can authorize up to £1,000, that will be it. The PO would then be issued What I mean by issued is it would be sent automatically by email to the supplier. If the controller cannot sign up to that amount, then it would go to his boss, perhaps the finance director, and he would have the ability to sign it off. But he will have known that it will have been signed off by the controller in the first place if he's receiving it. Once the email has gone off to the supplier would obviously service the order. So assume the auditors come in and do the auditing. The next thing is to create a receipt. Even a service has to be receipted. In a way, the receipt is acting as the authority to pay, because if the receipt equals the invoice in invoice matching, the invoice will be posted to finance for payment based on due date. So I'm not going to create the general receipt. I can, for example, put in the purchase order number, and it will find the appropriate purchase order. You can see it's approved, but it's not received. Now what I'm going to do is take the button, hit the next button, and what it's going to do now is it's going to create a goods received note. Now you can see here, that's the value, ordered value. I don't have to receive the full value. It could be, for example, that the auditors only came in for half a day and they were only going to be charged £500. But for this purpose, I'm going to just receive all, save it. And to be honest, that's all there is to receiving. Coda will automatically create the document for you. And the only decision the buyer or the manager has to make is how much of the service to receive. Once it's receipted, it will do two things. It will create a goods received note, a GRN, in procurement, and it will also create what we call an LRN, a logical received note, in invoice matching. Because invoice matching is a totally separate module. And the way that the invoice matching module was designed was that it can receipt and receive receipts from numerous purchase ordering systems. So obviously, when you receive goods in Coda's procurement system, it will automatically create LRNs, logical receive notes, in invoice matching. But for example, you could have two procurement systems. You could have Coda's procurement system for services, but you could have another procurement system for stock related items. And you could have an interface feeding into invoice matching of LRNs. So invoice matching becomes the sole place for matching all your invoices. So you direct all your invoices, whether they're service or non-service, into Coda's invoice matching. So once the invoice comes in, you create an invoice. Now you'll notice here I've got PO invoice. So obviously that's going to match to an invoice in Coda. But for example, I could have non-PO invoices coming in as well. And what normally happens then is that because you're not matching against a physical PO, what we can do there is send that through workflow. So whether it's a PO or a non-PO invoice, they all go through invoice matching. Nothing is directed straight into finance. Everything is done in one place in invoice matching. So this is a PO invoice. Now the first thing I'm going to do is put in the order number. And the only information that accounts payable have to fill in is the header information, because the line information will be pulled from the LRN. So the first thing it's got to do is find the LRN. You can see this button here, search for an LRN, and you'll notice that the supplier and the department are not filled in at the moment. So if I search for an LRN, you can see it's found the supplier and it's found the department. It doesn't put a due date in yet because I haven't put an invoice date in. As soon as I put an invoice date in, it will look at the terms on this supplier and put in a due date. So this information down here, the user doesn't have to worry about. The only information the user has to put in is what's on the top line here. Invoice number, invoice date, invoice total, and VAT. You will recall that when I raised the purchase order, I didn't enter VAT. And the reason it's been configured this way is that a buyer normally doesn't know what the VAT is. So we take that problem away. We do not enter VAT on the PO. We enter VAT on the invoice, but we're matching the net amount. So we're matching in this case, the £1,000 on the PO against the net amount of £1,000 on the invoice. So I'm going to put in an invoice number, an invoice date. You can see it's calculated now the due date and an invoice total. And now I'm going to enter the tax. So the next stage, once I've added the header information, is to save and match the invoice. So what Coda is going to do now is it's going to find the LRN and attempt to match the invoice. Now you can see here, it's found the LRN, £1,000. It's found the invoice of £1,000, and the difference is 0. It's fully assigned, fully balanced. And if I commit now, it will post that invoice to financials to be paid. Now we know that life is not that easy and there will be differences at times. So what happens in that instance? Let's say, for example, that it is instead of 1,000, it's 1,005. Now you can see here there is a £4 difference. What you can do now is change the amount to reflect the difference. And if it's within the user's tolerance, this can be matched. So for example, now saying the invoice is 1,004. The discrepancy, now you can have lots of different types of discrepancies. It could be a write-off, a debit note, and a request for credit. What a write-off means is that it doesn't really mean write-off. What it will do in Unit 4 financials is it will create another line and it will charge the £4 to the same expense as the 1,000. That'll enable yourselves to see that there has been an overcharge that's been written off. It's going obviously to audit fees, but you're aware that there's been an overcharge. It's within tolerance, so you're happy for the accounts people to write it off. If it's above tolerance, it would go into a workflow to be authorized. Debit notes, what that does is if you have it as a debit note, it will create two documents in Coda. It will create an invoice for 1,200, and it will create a debit note for the difference. So when you actually pay the invoice, it will only pay the 1,004. A request for credit, it can physically send a request for credit to the supplier, and once the credit note comes in, it will then be able to be matched against the request for credit and post both the credit note and. So here I'm going to make it a write-off, give it a reason code, and if I apply the changes, you can see it now matches exactly. And if I commit, it's now submitted to financials. And if I go into reports and put in today's date, you can see this is what I've just posted. So there's the creditor for £1,205. There's the £1,000 going to audit fees and the additional line of £4 going to audit fees, and the difference being the VAT of 201. Now that is a very quick demonstration of procurement and invoice matching. There's lots more to procurement and invoice matching than what I've just demonstrated here. For example, you can do commitment accounting. So when you raise a purchase order, it will create a commitment against that expense, which in turn allows you to do what we call budget checking. So when it goes off for authorization, the purchase order, the manager can then see what the total spend is against that budget. So he will be warned that if he approves this PO, it will exceed his budget. Other things in invoice matching is the fact you can do self-billing. So, for example, if you have contractors, what you're able to do is when they fill in timesheets, you can use that to receipt the purchase order against what the contractor is booked against. And by running the self-billing process, that GRN will automatically create a purchase invoice. It will match against the purchase invoice and post to financials. And if you want, it will create a physical purchase order to send to the contractor saying, this is what I'm going to be paying you, and this is your purchase invoice that we are paying. Another useful feature is deferred matching. And with deferred matching, what you can do is physically match an invoice even though you haven't had the service yet. Say, for example, your marketing department wanted to have a new marketing campaign. So they go to the marketing company and they say, yes, we'll do that for you. It's going to cost you £10,000, but we need an upfront cost of 1,000 before we even start. So they will send you an invoice for £1,000, but you haven't received anything. You haven't had a service. So how do you go about it? And what you can do is you can do what we call deferred matching. And with deferred matching, it will send the document into financials. So the creditor will go to the credit line, pay the supplier, and the debit will go to a prepayments expense code in your P&L. Now, when the other invoice comes in, when the service has been completed for 9,000, that will obviously be matched off. And when that gets posted to finance, Coda will automatically reverse out the amount from prepayments into the expense where the 9,000 is going. All that is automated through invoice matching. So you'll get a separate document posted at that time, reversing the entry out of prepayments into the expense for the marketing charge. Invoice matching also does accruals. So at the end of the month, if you have outstanding LRNs in there, awaiting invoices, it will accrue those expenses on a reversing journal. And for example, you could have non-purchase orders awaiting approval. And again, those will be accrued. This is just a flavor of what Unit 4 Financials Procurement's invoice matching can do. If you want more information, Millennium Consulting will be pleased to provide a full demonstration. Thank you for your time.